Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita. With me is Snehi Shah. And let's quickly look at how the markets are doing. And when you're looking at the Nifty 50 index, around 1/10% higher where the Nifty is concerned. But we've done well if I'm looking at it from the lows of the day. But the way we opened, well, at least it felt back then that there was more to be desired. So that's on the Nifty. And why is there pressure? Let's pull up the Nifty IT index. That one is up 1.6%. And despite that, you're seeing the kind of move on the Nifty that you're seeing. 1.7 on the Nifty IT and holding up very, very smartly. This is on the back of course, TCS's numbers, which I expected to come through. So you want to look out for that. But you look at some of the other sectoral indices. The Nifty Bank absolutely muted. Around 1/10% lower. The Nifty Auto Index is where some bit of the pressure has started to come, 0.8% lower. You're also seeing pressure on the FMCG index, the Pharma Index, which is 1/3% lower, and the PSU Banking Index. The Nifty Realty, which is of course more of a reflection on broader markets, is down 1.3%. So that's the other one which you want to keep in mind. But that one also seeing some bit of pressure. Let's talk about the small cap and the mid cap indices, the broader markets. First, if we can pull up the advance decline ratio, of course, skewed towards the declines more than the advances. So some pressure building in on that advance decline. There you go. Clearly skewed towards the declines. But you're looking at the Nifty mid cap and small cap, which are down around 1/3% thereabouts. So some bit of underperformance visible on the broader market indices as well. That being said, let's go across. Kunal, what's your take on the move on the Nifty today?
I think it's a very good move for the indices. Very good recovery. I think intraday we were almost at 400 points down on the Bank Nifty. From that to recover to 40-50 points just negative on the Bank Nifty, I think is a very interesting recovery for the index as well as for the Nifty. I think we managed to just about protect the 25,000 mark by the skin of the teeth. But I think the recovery for the index from that sub or close to that 25,000 mark towards coming back to 25,100 plus levels, I think is an indication that we are looking at strong, formidable support points for both these indices. Now, the only change which is happening since yesterday is the mix of stocks which have been moving up higher and the ones which have gone through a bit of a correction or a cool off in terms of prices. So the ones which were leading in the last few days of the market recovery, those sectors and those individual large cap names, they've taken a bit of a back seat. But I think this has given chance as well as a time for the underperformers to make a comeback, of course, led by news flows, something like Titan, etc., which has done reasonably well today. So I think, till the time we just trade above that 25,000 mark on the Nifty, and if we close above these levels, and even for Bank Nifty, if we close above this 56,000 mark, which we discussed in the morning also, net the bias and the view still remains on the positive side.
Bias views more on the positive side. Near term, Kunal, would you still believe that we'll hit 25,500 at some point this week? We've 2 more trading sessions to go.
Yeah, I think we should hit 25,500 mark. So there is, I think one of the reasons why the market sold off today was the spike in dollar index. I think we moved on from 97.5 to 98.8 or 98.9 on the dollar index, or closer to that 99 mark on the dollar index. We are seeing some sort of indicator, on the dollar index also, that it's reaching some sort of an overbought territory. So you might see a cool off happening into the DXY potentially in the next 1 or 2 days. That should aid the rally for our markets further. And I think that's one of the reasons why I would still believe that till the time we hold on to that 25,000 levels, 25,500 should be good to go.
Okay, so that's the take on the index as well as the broader end of the market. But let's just focus from equities to commodities for a bit and take a look at the move that we've seen in copper prices and aluminum prices. On the back of this kind of pricing action, you have positive move on Nalco, Hindustan Copper, Tata Steel, Vedanta. In fact, Nalco is up more than 3.5%. So is the case with Hindustan Copper, about a 3% uptick on that front. And Nifty Metal is the sector that has taken a sharp U-turn from the day's low and is once again in the green. Kunal, your reading on Nifty Metal and something like a Nalco, a 3.5% uptick, your reading on the stock?
Yeah, this is a very good turnaround again for the Nifty Metal Index. We were discussing this point earlier that there are the only 2 sectors which have been very strong since the last few weeks has been the metals and the PSU banks. Now metals, of course, the leadership has been changing. Earlier it was Tata Steel, then there was a phase where JSW Steel managed to be one of the stronger price performer. And then I think recently it was Hindalco, the stock given a breakout above its multi-month swing highs. So I think the leadership is changing with the metal pack, but then the sector still remains vibrant we're still seeing the Nifty Metal Index showing signs of a good recovery. In fact, today on the candlestick front, assuming if we close at current levels for the Nifty Metal Index, we could be forming a bullish hammer kind of a candlestick pattern for the index. So that should be another positive for the index within near term.
What are your top picks within metals, Kunal?
So yeah, I think Nalco is one of the stocks which I was actually highlighting at current levels. Looks very attractive, and especially with the kind of breakout, the kind of move which we're seeing on the swing charts for the stock, trading about 220 plus levels. Would look out for 236 as a target for Nalco, and stop loss could be kept at 220. And the second would be a ban SBI card, something which I flagged off a couple of days back when the stock was heading towards a breakout of 900 levels. Today, it's done reasonably well. The first targets which I had assigned was close to 925. Those levels have been crossed, but I think at current levels, I would look out for a further higher target of 945 at least for SBI card. So traders could look at a fresh buy, keep a trailing stop loss of 912 on this trade now.
Okay, so Nalco, SBI cards looking good to Kunal right now. Kunal, one sector under immense pressure today, other than real estate, is the entire auto space. Surprising to see such a move like this, given the kind of moves we had seen on auto, consecutive back-to-back gaining days after the GST announcement that had come. Do you believe that was the trigger that worked for auto back then, and it's time for autos to once again become subdued, or this is just a one-off?
So it will remain subdued for some more time till the time other sectors try and pick up pace. But then, staying after such a kind of a strong multi-week up move, there's bound to be a point where the sector remains to be one of the limelight sectors for weeks and months to come by. I see it as a very strong indicator because you've seen a complete change of leaders in this pack or in this move for the auto pack. You've seen Eicher Motors, which has been an underperformer in 2022-23, I think good part of 2024. That stock has made a dramatic comeback. Maruti has made a very strong comeback. And the erstwhile leaders as such, M&M, Tata Motors of the previous rally, these stocks have underperformed in this leg. So which means that we are looking at a potential churn within the auto pack, and I think that should be favorable for the auto sector. But you have to look at new leaders emerging. So if you're looking at the older picks or the older ones like M&M and Tata Motors, and assuming that these stocks would continue to move up higher, I think you could be in for some bit of a negative surprise, because my sense is that this change in leadership should have an effect on the auto sector over the next 3 to 6 months. And I think any dips in that sense for the auto pack, and especially for these few odd names which have been fresh leaders, should be taken as a good buying opportunity.
What about the India VIX, Kunal? On a day like this, where we've had a flat market, we had VIX, closing on nearly 10 yesterday. We were speaking about that trend. And this kind of a market not helping the VIX at all. The kind of flatline we've seen today versus yesterday, of course, through the day we've made a bit of a wave, but how should one read into the VIX, and what's the impact of that?
It was up 4% in trade today, around that midday mark, and it's simmered down slightly. So, like Harsh was saying, how do you read this?
So, VIX is basically a gauge of market sentiment.
Correct.
It's the indication of fear in the market, or what kind of level in terms of highest sentiment or the extreme sentiments on the markets. Now, a rising VIX is of course a pain point for the markets, because it tells you that the markets are in a zone of panic. But a falling VIX is actually a positive sign.
Correct.
The bigger concern, Harsh, and the data at least shows that over the last 12 months or 24 months, the markets have made a top when the VIX has fallen below 10. So that's the bigger concern for the markets. Like in September 2024, mid of September 2024, the VIX had fallen to 9.9.
Okay.
And we know all what happened from September 2024.
Oh, yes.
Same was the case, I think, in March or April 2024. There was a point where the Nifty corrected some 1,000 points after the VIX falling below the 10 levels. So it could act as a sign of maybe complacency in the markets if the VIX falls below 10.
Okay, so, well, you want to keep your eye out on the VIX as well. And of course, we also will, and we'll flag it off to you as it falls below 10 if it were to. What we'll do is we'll slip into a very short break. On the other side, we'll take fundamental views as well. We'll be joined by Dharmesh Kant, Head of Research at Chola Securities. Stay with us.
Back with closing trades, we have Dharmesh Kant, the Head of Equity Research at Cholamandalam Securities, joining us on the show to give us a little bit of a fundamental sense about the kind of action that we've been seeing in the markets and the sectoral move lately. Dharmesh, hi, good afternoon, and good to be talking with you today. First up, give us your overall sense on where you see the market headed, given that the biggest trigger, the earnings season, all set to kickstart tomorrow. Your outlook on the Q2 earnings season, and the street largely expects this to be better, slightly better than Q1. Do you echo that view as well?
Yeah, good afternoon. Definitely, it looks like seeing the advances growth number of all the financials and banks which they have reported, both public sector and private sector, does reflect that there has been some uptick in the economy. Otherwise, public sector banks would not have reported 15 or 13% kind of an advances growth. So that was an outlier to that extent. Even HDFC Bank came out with a good set of growth number of 9.9%, which again is a proxy of economic momentum picking up. So we do think that this slightly it would be better, though in single digit only, but earlier the expectation was around 4 to 5% kind of PAT growth on the EPS of Nifty 50. But this time I think it may be 7.5 to 8%. So which is better than what the expectation was. And this is, I'm talking about the pro forma earnings growth and not on the extraordinaries and one-offs are to be excluded from that. And there we do think that, I mean, automobiles can give you a slight outlier kind of a performance, followed by metals basket. That's looking pretty attractive. The demand has been good on the Indian domestic metal consumption. So these are two sectors, banking, automobiles, and metals. These three put together should do well. And the others would be lackluster only. I mean, nothing great is expected, and the disappointment will come from the consumption sector. So all FMCG plays like Dower, HUL, and the likes are likely to disappoint again. So net slightly better than what the expectation was, and the market is echoing the same. It's range bound though, but likely to pick up post earnings seasons, starts rolling in.
Right. Dharmesh, just two questions for you on that view. First up, you said consumption could be the laggard this time around, and fair on the back of these GST cuts and the disruption we've seen over there. First question to you, do you see this changing by quarter 3? Are we expecting to see some recovery in consumption? And while you did say that Dabur and other staples could be under pressure, what about discretionary? What about retail? Because the update from Titan is stellar today.
Yeah, see, consumptions have different baskets. So what I was talking about the staple basket
Staples,
as of
yes.
now, and that will disappoint. And we don't think that Q3 would be better than Q2, or I mean, remarkably better. It can still be slightly better off. I mean, volume growth can climb from 3% to 5% or 6% kind of a thing, but nothing which can move the needle so much that a re-rating comes into the play. As far as jewelers are concerned, I mean, they posted good set of numbers, be it PC Jewelers, BN Guardian or Titan. But Titan, you have to read with a pinch of salt. There's a caveat out there. If you look at the Titan numbers, their studded jewelry segment grew by around mid-teens, so that is what they have reported. And the plain gold jewelry was lower than studded. That means it's lower than mid-teens. And the coins was the one which did the rally. All the growth numbers came through selling of coins. So where the margins may not be there. So I am very pretty much sure that when they report their Q2 earnings, there would be a squeeze in the margin front. And this time Navratri has fallen into the last one, September. So Q3 numbers again, because you will have only one festive season going by, that is Diwali. So to my mind, whatever rallies happened in Titan, maybe a couple of percentage point more, but then the stock is not likely to see a trending bias going forward into Q4. So Titan one has to read carefully the numbers, and even the watches was only 12% and ivory was 9% kind of a growth. So nothing major happening out there. They did cite that customer count have fallen marginally, so that again is not a good sign for them. But I think local jewelers like PN Guided and all are likely to do better going forward, because they have a franchisee model as well, which has been working well for them. And Kalyan Jewelers also has been doing well. So this is the jewelry segment, but consumer durables, as far as they are concerned, I think automobiles will top out this time around. The numbers, because the base effect of October was very high last time. Both Navratri and Diwali fell into the same season. They will do 10%, 12% kind of a growth numbers in October. But again, it is likely to plateau out from there on, because forward bookings are not there. Whatever has happened has happened. It's now the delivery which has to take place. So our advice is there's a time for medium to short term perspective. One should be booking out and then wait for November and December to pan out to take a structural, tailwind kind of a play. But for that, there's a wait time for that. A better entry can be there.
Okay, so that's the take coming in on the overall consumption basket. Maybe more trouble ahead for auto names post the quarter 2 earnings. But let's focus from autos and consumption to telecom now. In a conversation with ET Now, Gopal Vittal, the MD at Bharti Airtel, addresses the issue of spam calls along with sharing insights on the new partnership with Starlink and the synergies from there. Let's take a look.
We are doing our bit, and we've launched the spam solution. We've almost reduced spams by 48 billion in India. Fraudulent links of over 3.5 lakhs have been blocked. The Ministry of Home has recognized our efforts. But the fact is that no one player can do this alone. So you've got to have the whole ecosystem. I've got to run the whole ecosystem to be able to partner, and that will require potentially new institutions. It'll require new regulation because the surface area of this crime is not just on the telco networks, on SMS or calls. It's also on digital side. And so it needs to be and I think that part needs to move as well.
Sir, a quick word on Satcom, given the fact that there is a lot of interest in this particular space, and of course not just in India,
we encourage it. We're partnering with satellite players. We partnered with Starlink. We're partnering with OneWeb. So we think it can solve a unaddressed, set of users who are potentially don't have connectivity, to be able to get connected. So that to me is exciting.
That's wonderful work coming in from Sumita Karir. Word coming in from Airtel. Dharmesh, are you positive with regard to some of these telco names? And there are very limited players, frankly. Any one in particular that you like? And let me also throw in an Indus Towers. Any of those that you're liking at this point? Is Airtel at an interesting inflection point from a valuation perspective or not really?
See, as far as Bharti Airtel is concerned, I think it's priced to perfection, and nothing wrong with the company. It will continue to do so well going forward, and I mean 12 to 15% kind of a compounding on stock prices will be there. It will command a higher valuation premium compared to its peers. So that's for Bharti. I think the best way to play this out is again Reliance Industries because of the Geo platform they are having. The subscriber addition was quite great this time around, and they are also garnering data share base quite rapidly. And there's a headroom for the ARPUs to go up from 208 rupees to 250 rupees where Bharti is there. Bharti has guided eventually for 300 rupees kind of an ARPU. So I think Reliance will also catch up with that, and they have been a modest player out there. As far as Indus Tower is concerned, fantastic company, fantastic business, numbers are great, valuation are extremely great, but the only problem is Vodafone Idea, and because of that overhang, you don't know how much of your money can go into write-off and things like that. And life is becoming difficult for Vodafone Idea because of the debt on the balance sheet. Interest servicing is cash flow problem is still there. So that unless that overhang goes out, or there is a visibility of that panning out, that hope trade playing out, then I think Indus Tower will go for a substantial re-rating. So just if somebody wants to take that plunge and have that card playing out, then Indus Tower is a gateway. But to be safer, I think Reliance offers a better opportunity given the valuation multiple. It's already, I mean, if you take the Geo platform kind of a valuation, it's already 20% discount to what Bharti is commanding. So that catch up can likely happen in the near future. So the delta will be higher out there.
Okay, that's the word coming in on telecom. And in fact, Dharmesh, that's the kind of numbers we've seen when you take a look at the August subscribers numbers for some of these telecom companies. Bharti and Jio continue to add. But on the flip side, there's been a loss of about 3 lakh subscribers for Vodafone. So that trend is going to be something to watch out for very closely. But on that note, we'll step into a short break and keep the conversation going on the other side.